whole lot to really talk about, necessarily take action on right this second, but we're going to get through it, talk about what my plans are for the day, talk about trades that we're looking at for the small growth challenge, the small account growth challenge, and which ultimately isn't a lot to do because we've got mixed biases kind of across the board right now. But let's go ahead and have a quick look at what we're seeing, give my thoughts on it, and then we'll roll from there. So let's start over here. Dun, 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 dun. Yeah, there we go. So first things first, news that's coming up today. We do have some additional news coming up today. We've got some employment news coming up today. We've got some the core PPI and PPI news coming up today. These could be additional catalysts for what's already going on in the market right now. We saw a pretty big drop yesterday in our indexes, and then again this morning that's continued coming into the new session, which is still about an hour and a half from now. We've got the Dow already down 820 points, the S&P's down just about 80 points. So big moves, a lot of red coming into the regular trading session here in just a bit. So we'll see what happens there. But as far as looking at things that we should be watching in the marketplace and looking for tradable opportunities, that really comes back to having a plan and trading the plan. It's super easy to get caught up in when we see all this red, especially when we look at a chart. We go to the charts in just a second. We're going to see big moves. And it's super easy to get caught up in that and go, oh my gosh, I'm missing out. Look what I'm missing. I've got to get in on this. And if you don't have a plan, we start chasing the market, which sometimes works and oftentimes doesn't work. So it's important, more important than ever, especially when we have big moves like this, to take a step back and really look at what your plan says and do what your plan says. Right? Look at the plan you've already created, how you're going to handle situations, and then trade according to your plan. That way you don't get caught up in the excitement and the emotion, which often leads to making instant decisions, decisions that aren't well thought out, decisions where we're chasing the market. We don't want to do those things, right? We all want to be in at the top, selling from that top or buying from that exact bottom, but the chances of catching those exact peaks typically is pretty slim. They happen sometimes, but I think more often than not, having that kind of steady plan, that steady look at the market, gives us the better results over the long run, which is what we're looking at. We want to play the long game, right? We want to be here over time, participating in this and having a career of it, versus getting that quick big win, but then having months and months and months where we're having losses that we're having to recoup from that one big win. So anyway, I don't want to get on a soapbox about that. Let's just go ahead and get over to the charts, see what we're seeing, and get on with things. So first things first, over in the Forex side of stuff, looking over here at the Forex market, kind of the same thing we've been seeing the last couple of days. Market's really consolidating quite a bit. We don't see any real definitive leaders as far as strong currencies and weak currencies. Take that a little bit further. If I bring this over here and we have a look at the ranges, we can see that most currencies coming into the start of the U.S. session, which the U.S. Forex session began 4 minutes ago, coming into the Forex, the U.S. session of Forex, we can see that most of these currencies have already moved pretty close to or right at their typical ranges. So, in addition to not really seeing anything here right out of the gate, and looking at, whoops, I don't know what I did. Yeah, there we go. What have I done? there we go. So in addition to not really seeing any definitively strong currencies or weak currencies coming into the session, we've also got a situation where we've already pretty much moved the range that these currencies would typically move. Is there maybe a little bit more there? Potentially, maybe, but why take the risk? Just be be conservative, let the trades come, let the trades line up as they're supposed to, and then take the reasonable risk based on that, right? Over in the future side of things, this is what I was mentioning over here earlier. Big move yesterday following the press conference, the FOMC press conference, right? Big moves yesterday. We can see, we moved down. This 3170 was pretty well respected. We can see it a little clearer here on a 30-minute. We can see how 3170 moved down, repelled off of it, tested it a couple of times, then finally broke through it and moved on. We can see that here as well. Moved down, tested it, rejected it again, broke it. So what was support then became resistance, and now it's moved on down. Now we're pushing down towards 3100 right here, which will be another key area for us. This range really between 3100 and 3090, will be a kind of an interesting range for us to see how things go. Ultimately, in order for our 4-hour bias to really turn, we're going to have to break down below 3100. But I think we're going to see maybe a little bit of a struggle here. We'll see. There's a lot driving this market. There's a lot of stuff going on. We've got finally market seems to be catching up with the news about the market. We've also got potential resurgence in COVID infections. So, does that translate into additional measures to restrict flow of business, flow of people, flow of business? Who knows? I don't know. I'm sure there's going to be a lot of discussion about it today. Long and short of it is we've got a mixed bias. The 30-minute bias is short. 4-hour bias is still long, which, it's in the grand scheme of things, this looks like a really big pullback. But, if we go out and we really look at where we are, in order for this to really be a reversal, there's got to be, a lot more to this. We'd have to break down, like I said before, we've got to get down below that 3100, 3190 area, and then at that point we'd start to see our moving average, our shorter term moving average, begin to cross below that long term moving average or longer term moving average. So at this point, what this is telling us is we've got a mixed bias, and we just need to sit on our hands. Don't get too caught up in what's happened here and chase this, going, it's beginning, let's start shorting the heck out of everything. Yeah, it might be beginning, but we don't know how the market's going to react this morning when it comes in. We could keep selling off, absolutely. But at the same time, it's a coin flip. We could also push this back up to 3150, 3170 pretty easily. So, it's a crapshoot, which is why you've got to have a plan. And, my plan right now is telling me to sit on my hands. So I'm going to sit on my hands. I'm going to do something else for the day. Crude, same thing, mixed bias. Again, if the economy's all shut down again for increased COVID infections, who knows what that's going to do to oil. So, but right now they're a mixed bias. We've got short on the 30-minute, we've got long on the 4-hour. So, we sit on our hands. Gold, same thing, mixed bias, although we are starting to return to that longer term, but right now it's still mixed. But as this candle closes and the new one opens, we close above that 1730 area, the 4-hour should at that point move up where the shorter term crosses above, and we get a longer bias again on gold. Which would make sense if the S&P continues to fall, you would expect gold to start seeing a little bit of a push as well. But for right now, mixed bias. So there's not really anything for us to take action on at this point. So, long and short of all of that is we just need to be patient, right? If you've got a trading plan, if you've actually taken the time to write out and document a trading plan, this is one of those crucial tests of your mental fortitude to be able to stick to your plan, right? So don't get too caught up in going, oh my gosh, it's starting, I'm going to jump on this bandwagon, which maybe is a great trade. It might work out for you. It probably actually will. But that's neither here nor there. I try to take my personal bias out of it and just say, hey, we've got a trading plan. Trading plan says to do this. If these things don't line up, we don't trade. And that's where I am for today. So I'm sitting on the sidelines. Over in crypto land, same real thing goes on here. Same thing. We did finally break above. Yesterday we broke above 244 on ETH. So broke above 244, had a good little run up to 250, sold off of 250, which has been a big point of resistance for us already for a while. Back down to 244. So, again, if you've got an accumulation strategy, you might be buying additional ETH here at 244 again. Trend is still up, so we'd still be looking to go long on this. Bitcoin, same thing. Yesterday broke out of that channel, broke above 9,800, and then here over the last few hours now it's floated back down to come right back to this area that we've been struggling to break above. Break out of this again, I think we should be able to crack 10,000 on the next run. But, it could very easily sell off as well. So make sure if you are accumulating here, if you've just got a buy and hold strategy where you're just accumulating at key levels, there's not a whole lot to really do. If you're trading it intraday, you may want to look to these next levels down, like 9,700, for example. If you've accumulated or if you've gone long here and it pulls back and it breaks below 9,700, you may want to go ahead and unload and then wait for the next opportunity there. Same thing on Ethereum. If you've bought off of 244 and you're waiting to think it's going to go to 260 up here and it's reversing on us, if it breaks down below this 242, that'd be a spot to maybe sell and then wait and see if you can purchase at another lower level a little bit further down. So anyway, really across the board, there's not much for us to take action on. So for me, this is one of those days where I go do something else, right? Shut your charts down if you have to. You take it out of the equation. I know for me, if I sit here, because I'll be at my desk doing other things for the day, if I have this chart up, I'll be staring at it, and the more I look at it, the more tempted I'll be to take an action. Especially, my own personal bias conflicting with what my trading plan has. You've got that little angel and devil on the shoulder that are going, hey, dude, it's happening. The market's about to fall out again. Take action. This little guy's over here telling me that, whispering in my ear. Reality is, if you want to be in the trading game for a long period, though, you've got to be able to ignore that, put your personal bias aside, and trade for your plan. And that's a good lesson, I think, for the day. So anyway, today, trade the plan, stick to the plan, whatever your plan is. For me, my plan says I've got mixed biases on the 4-hour and 30-minute. That's in S&P, crude, and gold. They're all mixed. I don't have anything to do. So I'm going to go do something else. Maybe go for a bike ride. So that's it. Have a great day.